Hello and welcome to the weekly wrap video. Just a couple of things to catch you up on from the past 5 trading sessions. We have hit record highs in the US indices. This is as Tuesday's non-farm payrolls figure for September came in well below expectations at 148,000 against forecast 180,000. As such, markets have really pushed back their expectations for the start of a Fed QE taper, with some now not seeing it until well into 2014, with March seen as now the most probable time for the Fed to take their foot off the accelerator and reduce their $85 billion a month bond buying program. As such, that liquidity has really gone into US equities this week, which have also been assisted by some firmer than expected earnings releases. So the likes of Amazon and Microsoft really assisting some of the upside by reporting much firmer than expected results for the third quarter. But elsewhere this week, some concerns have returned over in the Far East as Chinese liquidity concerns continue to rise higher, particularly in the Thursday Asia-Pacific session, where the Shanghai Interbank Offered Rate rose the equivalent of 23%, as reports circulated that some of the largest banks in China, and in fact the world, had written off 3 times as much debt in the first 6 months of 2013 than a year previously. So this is not particularly settling as we head in towards the third plenum over in China, due to take place in November, expected to unveil further audits and inspection of particularly local government debt. And then on a final note, in the UK today we saw a 0.8% reading for advanced Q3 GDP, showing an annualised growth rate for the United Kingdom of 3.2%, beating the entirety of the G7 and much of their other Western counterparts. So it does show the recovery is pretty broad-based. We saw growth across all sectors surveyed, particularly manufacturing and construction, but again services take the lead, making up around 0.6 of that 0.8% gain across the third quarter. Looking ahead into next week, the focus is on the Federal Reserve rate decision. All expectations are for them to keep their foot on the pedal with their QE program. This comes in the wake of the poor jobs data we saw just this week. But elsewhere we have Apple due to report their earnings performance after the unveiling of course, their latest iPhone 5S and 5C models, and we continue to play catch-up with some of the recent delayed data from the US. We have CPI and retail sales next week. So of course we'll bring you all of those as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic weekend.